Hey guys, welcome back to our channel where we discuss all things finance and economics to help you manage your money better. Today, we're diving into a topic that has been on the minds of many Americans, the recent housing market crash that has affected the United States in 2023. With rising interest rates, a slowdown in economic growth, and an oversupply of homes, the housing market crash has led to a significant drop in the demand for houses, and as a result, prices have plummeted. If you're a homeowner, this could mean seeing the value of your home decrease significantly, which could make it difficult to sell your home or refinance your mortgage. On the other hand, if you're a renter, you may see a decrease in rental prices, which could be beneficial for you. However, the housing market crash could also have a negative impact on the economy as a whole, leading to a decrease in job opportunities and consumer spending. So, in this video, we'll be discussing how the housing market crash of 2023 impacts you, and what you can do to mitigate the risks. But, before we proceed, please like this video and subscribe to our channel. It helps us a ton with the YouTube algorithm by reaching more viewers. We'll provide you with examples and tips on how to navigate this challenging situation and help protect yourself from its negative effects. So, let's get started. First, let's discuss the causes of the housing market crash in the U.S. in 2023. Oversupply of homes. Over the past few years, there has been a surge in new home construction, which has led to an oversupply of homes in many areas of the country. This oversupply has led to a decrease in demand, as there are now more homes available than there are people looking to buy them. Rising interest rates. Interest rates have been on the rise over the past few years, which has made it more expensive for people to take out mortgages. This has decreased the demand for homes, as fewer people are able to afford to buy them. Economic slowdown. The U.S. economy has been experiencing a slowdown over the past year, which has led to a decrease in consumer spending. This has also decreased the demand for homes, as people are less likely to make large purchases like a new home during times of economic uncertainty. Demographic changes. Demographic changes, such as an aging population and a decrease in immigration, have also had an impact on the housing market. Older Americans are less likely to buy new homes, while a decrease in immigration means there are fewer people moving to the U.S. who need to buy homes. Inflation. Inflation has been on the rise over the past year, which has led to an increase in the cost of goods and services. This has made it more difficult for people to afford to buy homes, as they have less money available to put towards a down payment and mortgage payments. The housing market crash could also have a negative impact on the economy as a whole. The housing industry is a major contributor to the U.S. economy, and a decline in this industry could lead to a decrease in job opportunities, as well as a decrease in consumer spending. This could result in a domino effect, causing further damage to other industries. Here are some of the regions in the U.S. that have been hit the hardest by the housing market crash of 2023. West Coast. States such as California, Oregon, and Washington have seen a significant decline in home prices. The oversupply of homes in these states, coupled with rising interest rates, has led to a decrease in demand for homes, resulting in a drop in prices. Northeast. Cities such as New York, Boston, and Philadelphia have also been hit hard by the housing market crash. The high cost of living in these cities has made it difficult for many people to afford homes, and with the decrease in demand, prices have dropped significantly. Midwest. States such as Illinois, Michigan, and Ohio have also seen a decline in home prices. The economic slowdown in these states, coupled with an oversupply of homes, has led to a drop in demand and prices. Sun Belt. States such as Arizona, Nevada, and Florida have seen a decline in home prices due to an oversupply of homes and a decrease in demand. These states experienced significant population growth over the past few years, leading to an increase in home construction. However, with the economic slowdown, demand for homes has decreased, resulting in a drop in prices. So, what can you do to mitigate the risks? Here are a few things you can consider. Renting instead of buying. If you are currently in the market for a new home, it may be worth considering renting instead of buying. Renting can provide more flexibility in terms of your living situation, and can also be more cost-effective than owning a home, especially during times of economic uncertainty. Refinancing your mortgage. If you already own a home, refinancing your mortgage on a fixed rate for a longer period of time, such as 30 years, may be a good option to keep your mortgage payments from increasing with the rising interest rates. Refinancing can help you to lower your monthly mortgage payments, which can provide some financial relief during times of economic uncertainty. Diversifying your investments. It's important to have a diversified investment portfolio that includes a range of asset classes, such as stocks, bonds, and real estate. This can help to minimize your exposure to any one asset class, and can also help to mitigate the risks associated with the housing market crash. Avoiding high-risk investments. It's important to avoid high-risk investments that are particularly vulnerable to the housing market crash, such as real estate investment trusts, REITs. Instead, focus on investments that are more stable, such as blue-chip stocks and government bonds. Building up an emergency fund. Building up an emergency fund can provide a safety net during times of economic uncertainty. This fund should be large enough to cover at least 3 to 6 months' worth of living expenses, and should be kept in a high-yield savings account or other low-risk investment vehicle. Overall, taking these steps can help to mitigate the risks of the housing market crash in the U.S. in 2023. While there is no guarantee that these measures will completely protect you from the effects of the housing market crash, they can provide some financial stability during uncertain times. In conclusion, the housing market crash of 2023 has had a significant impact on the United States. While it may seem like there's not much you can do, there are steps you can take to mitigate the risks. By being patient, doing your research, and following the steps what we just discussed in this video, you can help protect yourself from the negative effects of the housing market crash. Please like and share this video, subscribe to our channel and tap the bell icon to get notified of our new video as soon as we post it. Thank you for watching, and we'll see you in the next video.